like starting just kind of with a bias here. Let me put my pre-market data back in. So I got my pre-market data now. All righty, so here's our spiders. Yesterday, we were saying, hey, we're being cautious. We're in an area of resistance. I showed you the hourly intraday charts on the broader indices. We had a narrow range bar, which closed under the open. Momentum slowing at resistance. Then, we had the Google put spread loaded, but never executed it because the cues couldn't break out. And, we started selling off here into the close. So now we're selling off more into the close. We're under yesterday's low now, but we're here on support. So 269.53, we're gapping down. We're still in a sideways consolidation. So the daily's still fine. But we're just in this trading range still at resistance. Q's a little bit stronger relative strength, right? It pulled in and it did not trade under yesterday's nice 2-bar reversal there. Diamonds weaker, look at that sell off right into this gap fill though area. IWM. All right, fine. So that's enough for that. We still have, we still have half lot of Apple bull put spread, but it's far away and it expires Friday. So that one's totally fine. It's gapping down. It's a bearish gap for Apple. I don't know what's going on there. So 174.82. It's gapping right to this breakout area. So it has, gap into support. We'll see if buyers step up there. We took our profits in VXX, and that was Greg was mentioning that was also a warning sign of possible market overbought, confirmed with the price action of the indices. Our oil stocks gapping up, CVX. Yesterday, you should have got your limit there to close that at a nice profit because it's multiple bar up. We had acceleration. We legged into our XLE. Look at that, almost at the dead high. We legged into our $75 calls for next week, and that was just picture perfect legging into a covered call. And as a reminder, I'm going to be doing a webinar today after the close at 4:15 Eastern on this exact issue, legging into covered calls and also doing new credit spreads like we do here all the time. Let's see, Twitter, we never got into. But Twitter's a 1, 2, 3. Look at that. I'm going to keep that on my list for today. Bottom left here is my daily. That is a beautiful 1, 2, 3 at resistance. It's holding fine. So if it takes out yesterday's high, it's going to move up further. I mean, I see 34 as the next target area. So I like this one as a tier 1 for me today. So I'm going to put that in a little window, or you can just set an alarm. MU, we did a directional yesterday. It closed great. And just with the market weakness here today, it's gapping down and, it's still fine. Look at this. It's holding right on this 2-bar breakout before lunch yesterday. So, sitting through a retracement is part of trading, but there's no damage. In fact, if you missed it yesterday, as long as the market can hold up in the first 30, 60 minutes, we might add and or put on a bull put credit spread. Because right now we have a swing trade option long, a debit spread. Amazon, we had a put spread on that, but we closed it at 4 cents, and that's gapping up. So that's a leader today. And the FANG stocks gapping up $25. And that was just a perfect, beautiful trade. You know, I went over that yesterday. Gap above all this resistance here, and then it held strong. So that's just a sign of beautifulness. Now I'm going to go over a bunch of earnings stocks, and let's see if we can get some more favorites in our watch list today. These reported after the close yesterday, ABT. So all I do real quick, and I just, you know, we talked about the unconscious competence. I can just flip through these so fast, but what I'm doing is I'm looking at the daily pattern real quick. So I had a bottoming tail on support. It's a mess. This is nothing for me. And then I look up here to my pre-market chart and look, it's spotty, so it's kind of hard to tell, but it's within the range. So as of right now, I have zero interest in this. There's no pattern on the daily, and there's no gap of significance to make it a trade of interest to me. So I'm just gonna move on. ASML was an ugly negation of the bullish bar 2 days ago. Right now, it's trading at 204 at the prior low. Really, no interest to me. I mean, maybe 30-minute low, a day trade, because if it cracks this, it might go lower. But it's definitely not a tier 1 for me. Morgan Stanley, topping tail, congestion here, relative weakness to the spiders. You see that without me even having to go back and look at the spiders and any of the broader indices? This is lagging. So yesterday's topping tail closing near the low of the day, deep into support. Now we're trading at 53.19, which it's still holding yesterday's low here. But, you know, if these banks crack, look at this weekly here on my bottom right. Look at that. 1, 2, 3, 4 topping tails at the lower half of this wide range bar. So it's on support from this prior low, but the longer it goes sideways here and doesn't bounce, this I would keep this on my short watch list. Let me just put that in a minder. Next, TXT was yesterday. Wait, I thought that was pre-market yesterday. Oh, it was. My bad. I'm looking at the wrong ones. My bad. All right. So, okay, after the market yesterday. Here we go. AA. Wow, I mentioned that thing, that incredible run off the 200 wide range bar. But, you know, it's gapping up and coming in. So, you know, if I were to do anything there, it might be a 30-minute low shorting a bear call credit spread, just because, you know, this could be an exhaustion gap for the short term. I mean, look at the run, and now it's gapping up on earnings. AXP. Now this looks good. Look at that, a nice close out of congestion, gapping up. Well, it's just gapping up too much for me, because look, it's gapping up to the low 98s. I would prefer it to be gapping, you know, around here and then get my 15-minute pullback. But that's strong. AXP. So we can keep an eye on it, but the gap's a little excessive for me. Where are you, AXP? Wow, we got a lot of them here, so I'm going to have to speed up here. Okay, so you're going to watch me go faster now. CP, nothing, 0. C, V, B, F. Nothing, but looks lower. KMI, gapping up, nothing. PIR, a dog. Look, gapping to 278 under all of that support on the daily. But it's under a $3 stock, and you know those are a little dangerous. But that could be a day trade short. I mean, this thing could be going to zero. Who knows? But that's ugly. TMK, nothing for me. VMI, these were all yesterday. Yeah, it's a nice it's another bottoming pattern. There's no volume pre-market, so I really can't tell what's going on. But it's pulled back on the monthly, weekly, no follow through to this big ugly red bar down, but it's not tier one to me. These were pre-market. ABB, daily sloppy, doesn't interest me much. ADS, gapping down, 212.50. It's just gapping in the support area, nothing. BBT, another bank, another weak one. So ugly. I mean, daily, weekly, ugly. But there's no volume here. But I don't know if this print's real. But 5150 is gapping up, so nothing to do. BK, gapping up, 54.25. So I look at my daily, it's gapping right here to this gap fill resistance. I have zero interest. BX, same, it gapped up and it's coming in to fill the gap, no pattern on the daily. DHR, bullish gap, pre-market, gapped up, coming in a little bit, strong weekly, monthly, but it's at 104 right now. Look, it's gapping right to resistance after being up 1, 2, 3, 4, 5 days. So that could be a day trade short under the 30-minute low. But, this was very bullish. So I would not swing trade it, but, for a possible gap and crap, if it's weak in 30 minutes. So you got to watch it. GPC, gapping down to 90. It's just in a mess of support, no interest. Key, another bank. Wow, look at that. Another week. Look at that. This thing could come all the way back down to 18 bucks. But it looks like, it's kind of hard to tell, but we'll keep an eye on Key as a short. NUE, wow, a lot of earnings. Look at pre-market, total mess. Up, down, up, down, up, down, up, down. It's flat, but no pattern here. 4 or 5 days up, topping tail resistance, no pattern. NVS. If this were gapping up, I would love this because of this rounding bottom, no follow through to this breakdown, pick up in volume here yesterday, but it's gapping under. Look, it's gapping to 80. So this might be a 30-minute low short. PMs, we were looking at that the other day on this kind of breakout here, but we knew earnings were coming up. It's gapping to 96.50. Wow, that's an ugly gap on Philip Morris. Wow, look, it's gapping right to near this prior low. I'll watch it, but I don't know what to do with that right now. All right, almost done. PPG, it's gapping up a little bit. No pattern on the daily. SON, nothing. TSM, these are all earnings trades, gapping down 39.80. So that's a bearish gap. See, it's gapping way the heck down here, which is in this breakout area here. It's just not tier one. I'm going to have to just come back to all of these in the first 30 minutes. TSM. This is semiconductor. That's okay. WBC. And this is the last one. So it's gapping up 140 and change, but it's gapping right to resistance here after 5 days up. Nothing to do there. But this is not a gap and crap candidate. Because, you know, it's been just churning. Yes, it's at resistance, but it's churning. You know, you got actually a bullish monthly right now. Weekly, a total mess. All right, so that concludes my review. And it's kind of wait and see here at the open to see if buyers are going to step back up. Let's look at the spiders one more time. So pre-market, it tried to hold right there and is making new lows. So there you have it. I'm a big, I got nothing here. Well, that's not true. I told you I was going to watch a few of them, Twitter and some of the banks. But yeah, I like this Twitter. But well, earnings are next week. Shoot, so I can't sell a put. Maybe I sell a put that expires tomorrow. And there you have it. I'm going to mute myself because Greg's coming on soon. I'll be back at 9:30.
Good morning, everyone. Okay, so a lot of these semiconductors went down yesterday. Yes, maybe with IBM, whatever else was being affected, but they came back. And we're going to see what they do over the next few days. We initiated position in MU, which is experienced a little weakness this morning with today's market, but this had a nice reversal after the gap down and actually cleared the highs here. So looking at the difference between LRCX and MU, you can see the huge difference in MU showing relative strength. And I don't know, excuse me, the details of these two, whether they do something somewhat different, but they're both semiconductor related technology stocks. And so with this kind of a reversal, and you wake up in the morning and this thing is down a bit and it's like, oh, should you have waited? You just never know. Sure, the markets were aligned to have a stall, but sometimes they don't stall. So messages, don't always be second guessing yourself if things don't go immediately in your way. And that's why we have money management, where we're going to put our stop far enough away where it shouldn't go, which in theory is supposed to take care of the wiggles. So right now there's a wiggle, and you can see the 24-hour, 60-minute chart. This is setting up a little buy setup. Yeah, so we'll see. I don't like the little breakout failure, which always creates uncertainty and many times will create or start a little pullback. And that's what I'm talking about right there. That little bar that pops above those little sideways bars. Now, it doesn't meet the exact textbook breakout bar failure definition, where we look for an inside day to the breakout bar. And then it comes in, but you know what I mean. If it pushes above those highs there and starts coming in, the base is real tight, it goes underneath it, it's going to pull back a little further. And it's going to pull back to where buyers feel comfortable setting up again. And that's why we'll watch this on a 5-minute chart to see how it begins to stabilize and then turns around. One that we were in yesterday gave us a scare was Grub. And if I turn this to a 5-minute, and I said to those in the room, I said, watch this right here. Let's see if it forms a breakdown bar failure, because that is often what happens in a scenario like that, where it's going sideways. It was a strong stock, for whatever reason, it gapped down because the market's gapped down and went lower. And I said, let's see if this will form a breakdown bar failure. And that's exactly what it did. And it came back up to the high of the day. And now it's chopping around up here, and we'll see, if it can get back above here. So it's showing a little relative strength to the broader markets right now. And you can see the futures here just kind of grinding lower toward this prior low area right here. We'll see if that actually holds. So let's take a look at those. Go back to this being a daily chart. And so the futures have pushed up into an area that I marked off in Monday's letter to look for the stall. So it's no surprise that the markets are stalling here. And that doesn't mean they're going to collapse. It just means they're dealing with this resistance here. This was a nice move up. And, on the futures, it looks nicer because then the spiders, because of the 24-hour trading, you've got multiple days up making higher highs and higher lows. And now that's stalled. And the hourly chart has begun to roll over. And so when you have a move like this, it's kind of like a type of a power uptrend, as we call it, where it just continually moves up and up and up, and now it's rolled over. It's not a climactic kind of move because you don't have the bars moving straight up vertically. So where is this going to stop? Well, we look to the left, and the support areas don't just jump right out at me at this. I mean, I can see this little consolidation here. So that 50 MA, which is usually a reference point on pullbacks in the futures and the broader markets, would be a place where I would focus. And that is at 2690-ish, which is right here. And that is in alignment with that little shelf right there. So that would be a place where I would look for the S&Ps to begin to stabilize. And you can relate that to where that is on the spiders, if you're looking at that. And then the next level is right around here. But considering this move up, we should see buyers on any pullback. The Dow, a little weaker, but in the same area. And now you've got more of a squared top than a rounding top. That's a little bit more bearish because it creates a larger area of resistance. And we'll see. It usually moves with the S&P, so you can watch both. I watched both. One sometimes turn before the other, but around 24,500 or thereabouts, 24,550 up in there. And the Qs also coming in and moving lower here, and some support here. Well, it actually could maybe hold on that low as it comes down to it. We shall see. But overall, these were bullish moves. That's a wide range bar up. It's up at that resistance. So, it looks right now like today could be a resting day or consolidation day. And maybe those strong oils like I have here will give it up, even though they're strong at the moment. They're even higher. This is a straight run up into resistance. Now it's gapping up. So I'm going to be looking at these for, potential gap and crap situations where they gap up here. And look at Oxy. I've been watching this for a couple of days. This is up a bit higher. And all I'll look for is them to begin to roll over. And you can see it's already a bit weaker, but I won't look at this on a 24-hour chart. But this little support here may come into play and maybe get a few days where these pull back, which would be normal after a move like this. And then they could set up the next buy setup. Since oil is doing so well, that certainly would make sense. The transports pushed up into resistance. Actually, the airlines showed a little bit of strength yesterday. Look, American popped up after that consolidation down there, and LUV actually went up a little bit, and DAL has been the stronger of them. Wrong symbol. And so a lot of things that moved up. Yesterday was a decent day. And let's take a look at our internals, and then I'm just going to turn the mic off for a little while before we get into the open. So here's our internals, and our sentiment is neutral. So really doesn't give us a concern that as the markets have moved up here, because option traders are not jumping all over themselves to bet on this market going up. And that supports it going higher. So breadth is a little overbought. So some type of minor correction here makes total sense. We'll see how that plays out. And here you've got the spiders and Qs, and you can see at their reference points as spoken about. So markets are a little weak here. First thing this morning, we'll see what happens, whether they reverse. So a lot of times you want to watch it around 10 o'clock. That's the first reversal period where they may turn, and the second one is 10:30. So, all right, I need a couple of minutes to switch my computers here, and we will be back in a couple of minutes.
Hey, good morning, Gus. Yeah, so we're just going to hang tight here at the open, but I'm here if you have any questions in the next 2 minutes before the open. Wow, Fizzler. Well, I guess the daily's still okay. It's right at 50% of the range yesterday, and I was also watching as you know, on the monthly, look at SPWR. So I'm going to watch it over the next few days to see if it can build a higher range, lower risk entry. I told you I'm watching Twitter. Still has a lot of hourly resistance, but I really like the daily still. Yeah, I remember yesterday on Twitter, we were looking at selling the 30.5 naked puts that expired tomorrow. And I think it was like 21 cents, something like that. Now they're 9 cents by 12. So they got cut in half already. You know, I love selling calls and puts on the spiders, but no trade whatsoever right now. Look at the MU. So buyers relative strength again to the broader indices. Buyers stepped right back up, and we're holding the 50% of the wide range bar yesterday. Yeah, I didn't check the news, but yeah, I don't know what's going on with Apple's gap down today. Facebook neutral. I'll just go through the FANG stocks here. Google, you know, it had a lower low, lower high on the hourly, but it's still fine on the daily, but no new trade opportunity. Oh my God, Greg, look at PM. For a big conglomerate like that, that is getting its head taken off. My God, I never would have predicted that. So, folks, you know, you've heard Greg and I say many times it's not our style to hold over earnings except in unique circumstances. And many people who just automatically sell straddles and strangles into earnings. And what that means is a straddle is you're selling both a call and a put at the money under the premise that the expected move is going to be less than the money you put in your pocket. Now, let me see what the expected move was on PM.
Is this report early? Because it says it's supposed to report tomorrow.
Oh, I went, well, the list that I look at said before the market, but yeah, we can look into that. So the expected move on PM, ladies and gentlemen, was $3.67. So the people who sold straddles and strangles saying, oh, this is Philip Morris, there's no way it's going to move more than 361. They are getting run over by a freight train because that's heavier and faster than a Mack truck. They are getting creamed. But let me ask you all a question. What do you think, other than that, I'm talking about new opportunity. What do you think I'm thinking right now? Yes, implied volatility rank is 99%. What I'm thinking is, I love fear. Yep, a put call spread when it sets up. Now, for you day trade, or not even just for you scalpers, you can be more aggressive and you have to define in your trading plan what that setup looks like. For example, there's different flavors. I want an hourly climactic buy setup. I want a 15-minute double bottom and then I enter over a 5-minute bars high. That's a flavor of entering climactics. A more aggressive entry, and I'm not recommending it because of this bearish gap and wide range bar on the hourly, but a more aggressive entry is you ignore the hourly and you do the same mixture that I mentioned, but on smaller time frames. So if you were more aggressive, then you wait for a 15 minutes climactic buy setup, reversal bar. Then you go to your 5-minute chart, stabilization, nice double bottom, higher low. Then you go down to your 1 or 2-minute chart for your entry. So I'm just, but for me to do a put spread, I'm nowhere near it right now. Because for a put spread, I want to hold it for I can do it tomorrow. So, and it's too spready. The $85 puts that expire tomorrow are 15 cents by 52. And that's $3.50 of cushion. But I'm not ready. I'm just, letting you, say things of what I think. But I will be watching this, and I'll tell you when I do think it's ready for a put spread. And all we're trying to do in selling put spreads on these tanking stocks is, yes, it would be nice if they go up, because then, the delta will make our put get lower in value. But just the stabilization, and in my seminar, I call it when the storm passes trade. So I caveat that with don't ever trade stocks in the news with accounting irregularities. Those are like the kiss of death in trading news. You get caught or accused of cooking the books, just stay away. Do not trade them. And I don't trade biotechs unless it's intraday scalp, but not on selling spreads on them. But Greg, if you see anything you like, I'm just kind of filling time here.
My Akamai from yesterday that did not, move higher and fell. It's taken off here this morning, and I'm bidding for it at 72.80 if it'll come back in, but I'm not chasing it. So, and MU, I'm going to see what it does here. In the gap fill if it backs off. So I'll be looking at MU, see if that sets up for an intraday trade. But the Akamai, that thing ripped to the downside and just turned and ripped higher. So
yeah, the daily looks great right now. If it closed here, I love it.
Yeah, either way, as long as it holds on to its gain or pulls back, I'm going to get it. But unless it goes too far. So we'll see.
Twitter. So see how, when I made the comment earlier, I said I still like the daily, but it had hourly resistance. Look how that also sliced deep into that resistance. So this could be a 30-minute high trade, or a 5 or 15-minute pullback, whatever the case, provided the market's holding. And again, be aware of earning next week, but I start with the daily, and then, I go up in time and down in time to see if they're in agreement. But the daily looks great. And yeah, MU, just relative strength. Compare MU, compare Akamai, compare Twitter to the broader market indices. Just compare them to the Qs, and it's day and night of what relative strength is.
Yeah, and somebody on YouTube asking me, where do you get your gap list? I told them I assumed it was TradeStation.
Yeah, TradeStation, and I look at earnings, and I just look at movers, but yeah, TradeStation, yep. Hey, KRE moving up. That's a pleasant surprise.
Look at JPM. All of a sudden, the financials are finding some love.
Absolutely. Okay, key, KEY. I said if they didn't get a bid, that could be a 30-minute low trade. But with the morning action on key, KEY, there's still no trade. But yeah, I'm just making a comment that they're getting a bid, which is negating the short idea. Wow, look at AXP. I didn't see that gap this morning when I looked. Well, no, I did. I did. I'm sorry. I said the gap was too big for me. I said I would love to have a gap more to the 97 area.
Is John in the room from yesterday? Davis was asking about Tesla. If you are, John, that looks like it could or should start to move lower under today's low. There's a gap down. Just looking at the 5-minute.
Yeah, and I was also telling him yesterday, look at Twitter, man. Look at that wide range bar, 15-minute chart. Yeah, your Oxy finally under the low, maybe.
I got it in my left eye.
Let's see that hourly pivot. It closed, the hourly pivot low, 75.85, which is the exact penny. Look at that, folks. That's interesting on Oxy, OXY. The closing pivot low to the penny is the low of today also. So that's just more confirmation that that's your entry, today's low. All right, Philip Morris on the 5-minute chart is a climactic buy set. Well, Greg's showing it right there. Climactic buy setup, bottoming tail, and reversal bar. So it goes back to what time frame. If you are trading this as your main time frame, then you drill down to the 1 and 2 minute chart for your microscope of your entry. I'm not. Greg, do you know what Adrian's saying? The chart is fixed on PM only. I'm not sure what that means.
That means it's not changing to anything else. I guess whatever you're talking about.
Oh, okay.
I haven't clicked on anything else.
Yeah, got it. I thought he was saying something was wrong with your data. Yeah, spiders here are still struggling. So unless you are just a scalper on these relative strength stocks, I still recommend sidelines. And Twitter is relative strength award of these ones we're watching. I see retail weak, transports weak. Apple just made a new low.
And I got filled on that Akamai. Came all the way back in. Not all the way, but about halfway.
Look, Amazon had a beautiful, when you look at pre-market data, look at Amazon 15-minute chart, folks. It was just a beautiful gap up, come down, bullish engulfing using pre-market data. But yeah, with the indices falling, I got nothing. And say, we talked about a lot of things yesterday afternoon. And remember, one thing we talked about in great detail was when I get into a trade, and I'm always just trying to close option spreads at, under 5 cents to try to get the biggest gain and move on. And so Apple is an example. We closed it out at, I don't know, 3 or 4 cents a share. And now we're not concerned. We have zero headache if Apple has a bad gap down like it is today. Volatility VXX is up $1. I'm actually surprised it's not rallying more with the markets making new lows here. It's kind of just, yeah, it gapped up, but it's a little doji here on the daily right now.
I shorted the OXY here. My stop is above yesterday's high for now. I'll tighten that up once it starts moving.
Got home builders week here again, but notice on DHI that yesterday I tightened our stop to guarantee a winning trade. Yeah, home builders not having a good day either. Yeah, these spiders, I wonder if they're going to come all the way back to fill the gap, the unfilled gap from 2 days ago. Momentum is sure down intraday.
An unfilled gap there on the spiders, somewhere in that area.
Greg, we can, what are your thoughts on holding Oxy, for 8 days? A 77.79 put spread is 37 cents. That's good juice. It's just a matter of 8-day holding period.
It's climactic, but I really don't. Not really. I don't at all.
Right.
Do counter trend trades as swings.
Right.
I mean, if it was the other way around, meaning a stock that had fallen a lot into support and went sideways for a week or two and formed a base, but this is just, straight up, and it'll come down a bit. And so, I mean, this type of a pattern, it's not a surprise at all. If it comes down a marginal amount, which could be, 72, 74-ish or so, and then come right back up, make a new high, and then roll over. That's the kind of pattern that I would say, okay, 8 days, because it's going to retest.
Right.
So, just for not watching, let's just see. So my assumption is that those spiders are going to go down there, because there's no reason to think otherwise. So I'll just set a 1-day alert and we'll see if they go down there. And I mean, if you were trading the futures, I mean, it's really trending now. So you kind of like got to jump on board a moving train. You'd have to put your stop up here, and it could work because it has some momentum. However, not what I do. Wait for some kind of a retracement, and that could be something as small. And it's just, the basic stuff. And it already retested it once, but any kind of little retracement, it could be shortable. There's been no extreme negative ticks, NYSE ticks, so the selling is controlled, I would say. There's been no real panic. It's just whatever it is, it's selling, whether it's profit taking but it's not that it has, some real power behind it, meaning, those ticks are down at minus 800, 900, 1,000. That doesn't mean they won't get there. And if they do, and we're into that gap fill, that'll be a sign that the selling should begin to dissipate.
PM, the 5-minute chart has stabilized. Got some more bottoming tails here. But, the hourly obviously is still ugly. Yeah, unfortunately, on PM, it's just too spready right now. So the 85 puts that I mentioned that expire tomorrow, 21 by 79. I mean, I if it were 50 cents or 50, then I would do it. Well, I'd consider doing a small lot over the high of that 5-minute bar. Because I still have $3.82 of cushion. But it's another example where you could play market maker if you wanted to. Use the $80 puts, 0 by 58, $75 puts, 0 by 48. So that's $14 of cushion. And then you could, buy the out of the money put for 5 cents. And then you got a nice spread on your hand, $14 away. But that's if you got filled. Here, I'm going to try that actually. So I'm going to sell a 75, 70. Bull put credit spread for 25 cents. Expires tomorrow. Well, I'll jack it up here a little bit. Well, I'll do it for 30 cents. So obviously no fill, but I'll leave it there. What ticker, Dan? Oh, PM. Yeah, I have this nice Yeti microphone, but I guess sometimes when I turn my head looking at the other computer. So, David, yeah, I was just earlier this morning when I saw it tanking, I was talking about different flavors of aggressiveness depending on what time frames that you're scalping on that you would do. But, you start with your big one and keep going smaller for your entry. But the beautiful thing of selling these, what I'm calling when the storm passes on tanking stocks, 100% volatility, is if we nail the low, we can sell a way out of the money put. And it could even be for next week or even next month. And here's the reason why. I have no intention of staying in a month, but as long as the storm passes, meaning we pick the low, then volatility will contract and you're making money just through time decay, but you're making more money on it's Vega. Don't worry about the Greeks, but that's what Vega is. It's the volatility contraction.
Morning, Robert and Alexander. They getting questions on YouTube there. This advanced micro devices, and it's in a downtrend. It had some move off of the low that got climactic, the gap exhaustion, and it's a little weak here today. So looking at the weekly chart, it broke through support here. I don't like this at all. And if you're short, it looks like it's fine for an intraday short, but you've got all the time frames screwed up. Meaning, this is in a downtrend, the hourly's in an uptrend, the weekly here, it looks like a big top, but this little holding here, I just wouldn't do anything with this, Robert. And one thing generally in the room, when we get questions as to, can you look at a particular stock? It's good for us to know what you're thinking, meaning, are you long? Are you short? Is it a day trade? Is it a swing trade? Is it a core trade? Something like this, it looks like it could go lower, but, we looked at, and I know this, historically has always been, the battle with Intel. And Intel weakness today, the MU filled the gap. This has been the stronger. We'll see if this holds up here by the end of the day. LRCX. That's weak. So weakness across the board here. And the Qs related to its unfilled gap, it's quite a bit lower, but look, the market's having this move that they had here. So we look at where there's support. And I gave you guidelines, the last couple of days. Has it broken below a prior day's low? Is it more than 50% into the prior day? So this has broken the prior day's low. Where might it go into the next day? So as we look at this intraday, and we form a bias as to looking at this chart where it could come down into this prior low area. The other thing that it could do, and I have everything that as I look at, charts, and I have concepts or rules that can change my opinion. So this breakdown suggests it's going to go lower. However, it is now created a little minuscule area of support, that pivot. Now, if prices were to come down here and begin to turn and form a W bottom, it would create a stronger area of support intraday. And that could begin to change my bias that things could turn around. So when we look at a lot of these stocks that had good days yesterday, but are weak today, you could apply that same concept to those, meaning they may look like they're going to go lower as you look at the intraday charts, but the daily charts support that the retracement shouldn't be that deep. So we stay on the side and wait for the patterns to develop before we do anything.
Yeah, Greg, I just checked Yahoo also, and PM, was earnings 8 a.m. this morning.
Okay. I mean, TC is, that's probably the first time that in a long time that I could remember that it's been off, because they're pretty good.
Call Mr. Warden up.
Probably got better things to hear about than the problem with his software, that he was off one time.
Well, it's just a feed anyway. It's not his fault. All right, I'm reading Adrian. Let me read it here. It's April 3rd, expiry, iron condor additional bearer. Well, sure. All right, Greg, can you pull up spiders, please, if you're done with that?
Someone was asking if they could just buy a put on Oxy.
Sure. Mm-hmm. But, just check the spread, of course, and then it depends on what delta do you want. Do you want, the deeper in the money is going to cost more, but you're going to get paid more as the stock falls. And that's what delta is. Delta, by the definition of delta, is the amount that your option is going to go up in value for every $1 move of the underlying. So if you buy an 0.8 in the money delta put, then your option should go up 80 cents for every dollar fall. So you just check the spreads, because that's the biggest problem for day trading options, is the spread.
75.
Adrian, we'll come back to that in a second. Don't worry.
These expire in 15 days.
Okay, so good, good point. If you're
you don't want to do these that expire in one day.
Well, correct. So you could even go out to 8 days is fine, because if it's just a swing trade and you aren't paying, if you're only paying pennies for extrinsic value, then I have no problem going out 8 days, because extrinsic value is not a problem. When we sell options, we are selling expensive extrinsic value. So
the 76.50s, even the 76, you're paying 2 cents for the 76 intrinsic value, 7 cents for the 76.50s.
There you have it. So see, if you're only paying 2 cents or 7, whatever the case, well, on the 7 you could get filled in the middle and reduce that to 5 cents. Mm-hmm. Then I have no problem whatsoever trading those. None. So when you buy options, you got to be concerned with paying extrinsic value. When we sell options, that's what we're referring to as the juice, the premium. We want a lot of extrinsic value, which I also refer to as, it's a time decay. All right, so now let me go back to Adrian.
On to the spiders.
Yeah, so Adrian, here's our analysis. You have a put spread on, you said, for next week. That's, going against you. Question number 1 is, how far away is it? And is it okay? Does it need an adjustment, based upon the chart, the spiders? Or is it just a normal pullback and you're just going to sit through it and do nothing? We only do adjustments when the pattern warrants it. So you have to look at the spiders right now. And if you're wanting to put on a bear call credit spread to take in more premium, you have to ask yourself, do you think this pattern is topped out for the length of time of your bear call credit spread? And it's not a clear decision right here because, Greg's market review, et cetera. Yeah, we could come in and fill the gap. But then what if we come in and fill the gap and make a new high? You're going to be losing money on that bear call credit spread. All right, you're short the 266, 264. And then, it's back to your trading plan. With today's gap down and you saw our target area, you have to make a decision. Do you just sit through this? Could you have cut half of your profits or all of your profits with the expectation of, hey, I'm just going to reload at better prices on the gap fill? No right answer to that. So let's do Greg's input. Greg, how long, if at all, would you be confident on selling an out of the money bear call credit spread on this pattern? Would you do it for tomorrow? Would you do it for Monday? Would you do it for next Wednesday?
A bear above this high here?
Yes, because that's what Adrian's asking.
I would do it for tomorrow.
Okay, so I think Adrian's asking, though, for April 23rd, which is Monday. Would you do it for Monday? Okay, Adrian, so see, that's our analysis.
I mean, tomorrow, this could be down here.
Right. But
and
Adrian's wanting the weekend also.
The weekend's the unknown.
Right. So there you have it, Adrian. We don't have a good answer for you. So it's not a no-brainer, but you've just heard our analysis.
This trend here, and it's just starting to roll. And like I was talking about Oxy, the Oxy obviously is a lot stronger than the spiders. However, this is moving up just like that did. And when prices are moving up like this, and I could say, even though they've been moving up now for a while, it's been a choppy, disgusting grind. So the momentum just started to pick up. This could stop right here in this area and reverse right back up to make a new high. So I'm not willing to bet against this move higher because it's not mature. Whereas, and I'm only doing a day trade on Oxy because it's in an uptrend, right? But you can see the difference here.
So,
I mean, this where your spread is, if it came down there, I would be surprised if the buyers didn't show up even above it. But you've got whatever many more days to your expiration into next week. I think it's going to hold this area.
So Adrian, yeah, so that was a very good discussion for you and others. And it just highlights how our trading is so based on the bias of the chart before we give you an answer on the option strategy. So if it were, as Greg said, if it were tomorrow expiration, be all over it. And I actually just looked as a new trade, the 271s that expire tomorrow is only 27 cents. And that's because, volatility has been coming down a little bit with the market rally. All right, I'm not filled on my PM because I did it above the market, but I'm still just going to cancel it since we're making a new low here, and I'll keep watching it. No, right. I get that, Adrian, that it's an adjustment, but it's the identical analysis as an adjustment. It's identical. Does the pattern warrant the adjustment, which is calling a short-term top until Monday? And we just said we don't know because of the weekend risk. So we have no confident answer. But if you were willing to take that risk until Monday that, it's not going to go over your short strike, then that's your trading plan, and you have the tools to put on that trade if you want. And then another thing for an adjustment, just kind of it's an FYI, you don't need to put on the equal number of contracts. So let's say you have a 10 lot of the put spread. There's nothing wrong with putting on a 3 or 4 or 5 lot of the bear call spread. And that's, another benefit of trading options. When you hear me referring to the dial, so to speak, you can adjust your bullishness and bearishness with a dial. You can say, hey, I just want to, add a small flavor or spice of bearishness to my bullish put position. The market's coming in, so I want to turn the dial, 10, 20% to the bearish side. And then that reduces your bullish delta position by adding a bearish position to it. Wow, the red, green on the indices here, 10-minute chart. That is a picture of bull and bears whacking at each other right now. Yeah, Greg, this Lennar that's gone against us, I think if it closes like this, we might have then kill it under the low, because now it's just lagging.
Nothing. Market trying to create that support that I talked about. Here you can see on the 2-minute and 5-minute as it retested that pivot and it's beginning to turn around. So you can see this is how we have to make assumptions based on the charts. You break support, you look to the next support. And then that area between those two reference points could be where buyers step up and create support. And that's exactly what's happened here. Now, the ideal scenario with actually buying this kind of situation is where it would be closer to a major area of support versus just starting a correction after a run up. So these patterns that I'm explaining to you, the timing of when they happen in relation to what's happened on the higher time frame increases their probability. So there's no doubt that buyers are stepping up here. But you see on the 5-minute chart how it's broken down. So the expectation is that it's probably not going to go that far, you know. So are you a day trader? Well, it's a trading opportunity. You see the 2-minute chart. If you are looking at this as an entry, as a swing trade based on the daily chart, and the daily chart, you know, looking at this thinking it can go higher, it's probably going to be a better place to enter. If it stays where it is until Monday, that would be interesting. I mean, it would make today a very boring day because that's a little tiny narrow range bar right there. But we'll see. Oil had a pretty big bounce, retesting the low from earlier this morning. So Q's made a new high on the day. It got through today's open, and spiders are just struggling at today's open at the moment. That's what these lines are. This line here is today's open, that dotted red line, and that's yesterday's close.
Greg, do you have by chance have a scan called basing at the high to show relative strength, or Glenn, I'll answer that real quickly. Open interest does not affect me. Focus on high volume stocks, because then that should carry through to the options, but you just want high volume, tight spreads. So, and they, you know, they go hand in hand, but do I have a minimum saying, nope, I won't trade anything unless it has 1,000 open interest? Not at all. Just make sure they're tight spreads.
And there's the problem with that LEN and the DHI. I don't know, you know, wherever the management was with this, you know, maybe it's going to bounce a little bit, but the fact that interest rates are going up like they are,
right,
it's not going to fare well.
Right. Yeah, well, we're out of DHI on the weekly at a profit because we rolled it. And I went over that in detail yesterday afternoon. We're still in it in the monthly, but believe it or not, we're right at break even right now. So we could kill it. It's a May expiration. We were planning on holding it through earnings because, you know, the weekly looks so good. But it's another example of it went against us, but we could still get out break even if we don't want to be bothered with it. So that's on DHI, but you know, we still have the LEN problem child.
Exactly, John. You know, interest rates going up like that, you know, even though it could be a reaction in the moment, you know, by market participants because of that, and that thought of higher interest rates are going to be a negative for these stocks. You know, And that could be, what the long-term view is, that, these interest rates are, in theory, they should be going up because all of this talk about improving economy, jobs, people, now finding people to do the job is becoming tougher because, more people are at work, so on and so forth. So this is what's supposed to happen right now. Interest rates are supposed to go up. So all of this talk, prior to this last year about improving economy, and that's the government throwing out their BS, feel good, people. Everything's getting better and better. Meanwhile, really, the job situation, whatever, it's getting better. But, I look at the charts, into market analysis, interest rates not going up. So there's no demand for money. So you can tell me all of your, propaganda, but when I go to the markets and I say interest rates aren't rising, there's no demand for money here. So where's the economy so great? It's not there. But now that's starting to take hold, and there's a belief of that. And of course, why, interest rates started moving up, and now they pull back and buyers stepped up again. And if we don't see these go up, it's going to be a problem, because I'll show you exactly why. These are short-term interest rates, and they've been going up for a long time. And if long-term interest rates are going down.
And Greg, what long-term do you use and short-term for the inversion?
30-year and this 3-month. But
a 3-month?
2-year and the 10-year. Either way, I'm going to give you the same information.
Well, but I thought 3 years a lot faster than the 10. So that's why the 3-month didn't concern me as much as the 10 verse 20 or 2 verse 20. Yeah, 2 verse 20 or 30.
10 or the 30. So the chart that I show with the yield curve is 3-month and 30-year.
All right.
But if you looked at 2-year and 10-year, they pretty much track close. But some people look at things like the 3-month versus the 1-year or 2-year as an early indication. But just like going down to a 1 or 2 minute chart, you're more likely to get whipsawed.
So what was Juan? Remember Juan sent you some article and he was asking about, hey, is this a big warning? So it was in some newspaper or whatever. Was that the...
Juan doesn't have his own information to rely on, so he gets affected by news.
No. But I think he was just mentioning the LIBOR rate, which is an overnight rate as opposed to the 3 months at a minimum. So the LIBOR is the wrong one to look at, is what I'm asking.
There's so many things to look at, it's analysis paralysis. Just looking at the yield curve, it's all you need to look at.
I see Apple here still weak, basing at the low.
Jevin, target on Oxy, with this pop up in oil, it popped up immediately. It's up near the high of the day, but pretty far from my stop. That's why I gave it that big of a stop. So now I want to see if it rolls back over again. So what the target would be, it's got to get weak again. So let's see if it actually does. If oil stays strong here, and this is the problem with, climactics, in that, the buyers, while they've really, pushed things to the limit here, they don't give it up so fast, even when it seems, kind of, to a point where it's ridiculous already, how many up days in a row. But any little strength in oil here, and it's popped right back up again. So, and the exact reason why I've given it the room that I have, because this possibility. So Let's see. Generally speaking, you know, the turn day, I don't use the term day. Anytime you're into what potentially is the turn day, it's not the easy money. So you trade it small with a big stop and you look to add. So if it actually turns today, great. If it doesn't and you get whacked, no big deal. You've share sized accordingly and it's done, what is unusual, right? And this goes up above that high and it may take another day before it actually tops out and begins to pull back. At some point, it's going to pull back. Money management, I've said this time and time again, it is so important, versus just, you're saying, oh, that's a trade. And you hit the button and you don't think about the share sizing part. How could you hold on through something like this? You can't. So I've already compensated for this oxy to do the unusual. And if it hits my stop, it's not a big deal. I've already calculated for that possibility. I'll tell you, the majority, I've been doing this for a long time, right? Trading longer than teaching. But I can tell you from the educational side of it, the money management part is what most don't think about at all until they're losing the money, of course. But as far as a real money management plan and how to take advantage of that, that's like on their bottom of their list as to what to get educated about, because it's not a setup. Meaning, if you see this setup and press the button, right, it will potentially make money. But they don't think about how to share size and what have you. And I'll tell you, as I put these courses together over the years, whether it's at the prior company or this one, the money management one is the one that sold the lease, and it's the most important. And that's the link to that one, and it comes included in MTS. Um, Well, market spiders couldn't get through the high of the day, and Qs popped up there, did pretty much what I thought they would. Not get too far. They popped up, coming in, they just slap. And even the Akamai trade, I told you I got filled on that at 72. Just looking at it, 72.81. So it's down a little bit. I put the stop under the low of the day when it flipped all the way back down there. And I say, well, that's pretty darn far. Well, I didn't know what it would do. Weak market, stock makes this wild reversal. It's likely to do something that I can't even imagine as far as a pattern. But my assumption is that it'll find its footing because of that. Whether I'm right or wrong, we'll see over time, but I'm just letting it do its thing here within, those points here, and we'll see what happens. Maybe the market eventually finds its footings and buyers, come back to this and push it up. I mean, that big reversal today, there's a lot of buying that came in and pushed it like that. And now, maybe because it moved so much so fast, but I'm just letting it do its wiggles. But without proper money management, you're going to get sliced and diced. And that doesn't mean this eventually can't get stopped out, but, I'm not reacting to these, crazy kind of price action right now.
So that's Google was one that we were stalking to enter into the close yesterday, provided it's set up, which it didn't. But it's a nice hourly right now. So if the market does get legs, I'm still interested in this in this setup. Oh, Greg, you asked me the other day about Elfin, L-F-I-N, and which is halted. We're short the $5 puts that expire tomorrow. So let me just, elaborate again on what we spoke about before. So I am short the puts that expire tomorrow. Now, the put buyer has the right, but not the obligation, to sell me Elfin at $5 a share on or before expiration. But here's the dilemma that the long put holder has. Whether he owns Elfin or not, does he make an exercise notice while it's halted by tomorrow at 4:30 p.m. to his broker to sell me this stock at $5 a share? Yes or no? Unless there's public information out there that says, yeah, we think it's going to open up on the pink sheets. at, you know, at around $2 because we discovered this, the SEC discovered massive fraud and it's a Ponzi scheme, et cetera, et cetera. Unless he has knowledge of that, he does not know what to do. Let's say he bought this at 20 bucks. Does he want to sell me his stock at 5 in the unknown? And what if he's not long the stock? Does he want to be short the stock at 5 bucks? So that's why I am hoping that it doesn't open tomorrow and that our puts expire worthless. So that was a discussion that we had before, Greg.
So what if someone sold you that put on speculation, Dan? Meaning they don't own the stock.
Fine. Then they're going to be short. They're short at 5 bucks. What pain are they going to feel if this opens up at 20? They now got a $15 loss on their hands.
But it expires. I think you told me that even though it's not trading, they could execute that.
Absolutely. They call their broker and they say, I want to exercise my long puts, and Elfin, for every contract, 100 shares will appear long in my account and $5 a share will leave my account. But this whole discussion centers around the motivation of the long put holder or owner. There's not enough data for him to make a decision while it's halted.
So there's no way he could make money by putting that stock to you?
He will, we don't know until it resumes trading of whether he's going to make money or not.
What if it never resumes trading?
He still has to make the same decision. He still has to make the decision. Does he want to sell it to me for $5 by tomorrow? Yes or no?
So what if it resumed trading and it opens at 0?
It depends when it resumes trading. That's the problem. See, that's the problem he has, because my contract to agree to buy it at $5 expires tomorrow at 4:30 p.m. So he has a race against the clock of whether to make me buy it or not. Now, if he owned a May put, well, he has more time to assess. And hope, you know, it better be open by May. If not, I don't know what's going on. But, you know, if it opens it up on the pink sheets and you know, he makes me buy it tomorrow, then I own the shares on the pink sheets now. Yeah, Vince, we sold the April 20 for 40 cents a share when the stock was, you know, around 25 bucks. So we sold them $20 out of the money and 40 cents. I did the furthest out as possible. We knew we were playing with fire, you know, but that was the pattern. That was the trade. Hey, I don't know whether, how do you pronounce, he can't talk back, but Greg, is it Haven or Javen?
Javen.
Javen, all right. You know, sometimes Spanish, the J is silent. Do you mind showing Greg Google hourly?
Hourly of what? Google?
Yep. Because I made a comment that it's a 1, 2, 3, and he's asking what a 1, 2, 3 is. All right, so Javen, a 1, 2, 3 is a bullish, wide range green bar. Yours looks a tad different than mine. Oh well, your tails look a little longer, whatever. But a bullish wide range bar, and then an inside narrow consolidation bar, the very next one, in the upper third. So if you were to drill down to a smaller time frame, what that inside bar is a bullish high range consolidation. So as long as there's no resistance to the left, then these are very bullish patterns because it's a bullish run and then a temporary resting period. He stopped for a water break. And actually, Twitter on the daily was a 1, 2, 3 also, and that's why I had that on my list today. And I've been watching it here. It made new highs, and now it's all the way back to the low. I personally have not made one trade today. I'm a boater. I'm a captain also for fun. And this is just kind of, small craft warnings. I don't see anything low risk unless you're just day trading. Because then you can see your setup, you can snipe it, and then get off. But, I do more credit spreads as my kind of, expertise. And that means I don't day trade credit spreads. So my world, my setup is not here right now. And Greg does everything.
Can't you do something just for fun, Dan?
Yeah, I go to the gym and I bike ride and I boat and I travel. Go to Vegas.
That's not in the market, though.
No, there's no market. Is not meant to be fun. It's not a casino. We enjoy what we do, of course, so it is fun, but we do not trade out of boredom, out of impatience, out of activity. That's it. I know you're baiting me for their benefit, but that's just a novice approach. That I want action. I want action. Actually, Greg, isn't that one of the your 7 deadly sins? Something like that related to that point.
I create sins on a daily basis, Dan. I have to check the notes.
Hey, Dan's in Vegas. Awesome. Yeah, I was there New Year's. My buddies out there always get me free rooms. And I ran the office for Greg in Irvine, California for 7.5 years. And when he owned Pristine, and I would go to Vegas once a quarter because my buddies, would always get me a free room, and I'd just go over there for the weekend. I actually flew the students over. Well, they paid their own fare, but and Greg, do you remember Mark Panensky, the pilot?
Yeah.
It was when he was with us. It was the advanced lab 2-week course, and I think there were 7 of us, and the market closes at 1 p.m. over there in California, as you know. So we made a day and night trip. As soon as the market closed at 1, we booked on over to the airport, which was right across the street, got on a 2 p.m. flight, landed at 2:45, and we just went to Vegas, and we played the spinning wheel. See, I'm not a gambler. No, that's not true. We had an actual valuable lesson, and I even wrote a article about it, the following week. And we walk by that table where you're just betting on red or green, red or green or odd or even, whatever it is. I don't even know the name of the game since I'm not a gambler. Because my expertise in using odds and risk management is in the market, not on the gambling floor. But we walked by and we heard all this racket going on, and we saw Greg, like, 9 reds in a row. And then so people kept doubling down on green. So it's either red, green, or odd even, but you know what I'm saying. And so we just sat there and watched, all of us. And we saw, boyfriend and girlfriend fighting, and the girl saying, "You better not double down again." And he's like, "No, it has to be green next time." And guess what? We watched this go on for 3 more rounds of consecutive red. And then we saw girlfriends, wives storming out, throwing their drinks. They were so pissed off. And, guys also bitching and, you know, running out of money. As soon as we saw that puking point, Mark and I walked up to the table. I'm cheap. I put it like $20 down. I think he did a 50. We won. We collected our money and walked away. So there was valuable trading lessons in that about watching the human emotions that were going on right there. And we waited for the puke point. We stepped up. And I don't know whether we would have done it done it twice or whatever. But we took our money and walked away. We did not say, "Oh, okay, now I got the house's money. Let me do it again." No, we walked away. Yeah, roulette, black, is that what it's called? Yeah, the spinning wheel. Yeah, it's a spinning wheel, and you could do different things, but we were just, and it's a vertical little machine that shows the red and the black or the odd and the even. And you can see how novice I am around the casino table. But I'm not adverse to professional gamblers who use the same skills that we use for intelligently stacking the odds in their favor and using discipline and proper risk management. That's where I think the two have similarities. But I don't know anything about the proper risk strategies, so I stay away from it. This is my game. Stock market. Wow, Morgan Stanley at the high. Impressive. LRCX getting on. Wait. TRI, I've had him as a bottoming watch here. That's still holding up pretty well. But LRCX is taking another second day of whacking. Yeah, AMAT also. Wow. Yeah, these semis got hit the last 2 days. ASML was another one. Key earnings bank, KEY earnings is at the high. I cannot believe this whacking that PM is taking. I don't know what they said to make the bulls so upset today. But do I care? No, I don't. I'm just a chart reader. And I told you I'd watch it, and there's no reason to enter yet, but I'll walk you through it when I do it. Greg, remember BMY is another one we're watching as a looking for that capitulation.
Yeah.
But people look at BMY and compare that to the story I just told you about Vegas. There's no signs of puking yet in BMY. Yes, it's oversold. Yes, it's a climactic buy setup on the daily, but the storm has not passed yet.
I will look at it in a second. I'm going to look at CLX for Fabio because I was watching this. See how it's broken below the low here? This is like what we deal with as traders every day. I looked at this, I stopped to focus on it for a while because it's just broken down under this base in a downtrend. I mean, this has room to fall, so I want to short it. But I don't want to short it now because it's not set up how I want it to be on the 5-minute chart, meaning it's extended from those moving averages. And I see it break below the low of the day. And the first thing that comes to mind is I'm going to miss it. Right. And, you know, at that point, it's like, oh, do I want to do it now? And there are probably points, not probably, points in the past where I had drilled it. And maybe it keeps going down, but you just set up yourself for failure eventually because it's just a bad habit to go against your plan. It's not the perfect setup. So I'm not going to do it. But I mean, if this does set up in the afternoon where it consolidates for a while, I'm going to come back to it to short it. Now, if it just keeps dropping, which is certainly possible, I just miss it. You know, but this is what we all deal with as traders. We come across something that looks like attractive in one time frame. It doesn't match our plan in another, assuming you have a plan, and you just do it anyway because of fear of missing out. And a lot of times you get burnt too. So I just thought I'd share that since it was something I was looking at, and maybe it just keeps going here, but I don't do it because it's not what I do. CLX. Kind of like that. And he's talking about the 15-minute. So here's the problem with this one, and I believe you've taken MTS. This is climactic. It had this big drop, but it started the move down today. But intraday, it's had this climactic move. So the rule is to wait for a double top. So if on the 5-minute, it'll form a double top. Same thing I was explaining about the markets earlier. You know, they're in the middle of reference points. Can they form a double bottom? Right? So we want to see this create an area of resistance and get a retest. And then that, even though it's got this void, you know, you give it time to create or form an area of overhead resistance where you have a stronger reference point of resistance. Now, the other thing that you could do, and what I did with Oxy, meaning I'm going to give it a huge stop and I'm going to share size it for that stop. So say you entered it on this sell setup on the 5 or this on the 15 here as it took out the low. And where would you share size it? I mean, put the stop, and you kind of have to spitball it, but I would say maybe above 122 since there's some overlap here. And if we go to the 2-minute chart, maybe we see that, well, yeah. So you can see right there where there was that stall in congestion. I would put the stop there if I entered it right now. And if it went, you know, or, you know, you wait for it to, you could add to it up here if you share sized it up above it. And then sometimes you get a higher high and a higher low, and then it rolls over. Talk about failed buy setup on DHI. Well, DHI is a victim of interest rates. That's the intermarket analysis part. So I think Dan has already killed us at a break even. But I mean, right, that's why I mentioned earlier, you know, TBT gapping up like that, you know, bonds falling. That's not a good combination for the construction sector and home builders, which I wouldn't be surprised to see they're on the bottom of the list here. Yeah, here's construction. ITB. Look what's happening there. It looks just like DHI. Now, this could be a go-to list too this afternoon too for shorting, looking for these to continue lower. I mean, they've big range days today, but now Home Depot, look at that big wide range day from yesterday. We talked about that yesterday. Maybe this will form a double bottom here around that 177 area. Come back to it. So the failed buy setups usually fail sooner than this. Again, this is a reaction to interest rates, but failed buy setups are usually after the second bar up they fail, or right after the turn. It's pure play, maybe. I mean, you could look at the stocks within the sector. If you go to XHB, which is the home builders, it's I guess more focused, but I mean, HD isn't a home builder. BBBY isn't a home builder. Those are products, obviously products that could be sold in a home, but BBBY, that got clobbered a week ago. I'm not sure what some of these others are. I always found this to be an interesting stock. I don't know why. I mean, it seemed like they never split it. Q's new low on the day. Spiders testing it. So I'm buying there. Choppy price action today. Yeah, Hillbilly Girl. I'm speaking to someone in the YouTube over there. No, I mean, look, there's a lot of different ways to trade. I mean, I had a couple of guys that worked for me years ago, and they traded those stocks too, and they would buy millions of shares, and beaten down pieces of junk, and they would just put sell orders in, above where prices were, and just wait. When some news would come out at some point, and some of them would go to zero. They didn't care, right? They had hundreds of positions in these penny stocks, hundreds of positions, and they'd set alerts, and they'd wait, and they made money. And, they had a plan on how to do it. So financials having a good day today, but overall, this is just a mess. Just being up on the day isn't. That one looks better. No problems there. This looks like good for maybe for a breakout tomorrow, depending on where it ends the day. No big deal today. It's just a little bit of a consolidation day. GE coming up to its declining 50 there. We'll see what this does in the next couple of days. Energy. I looked at this dollar ETF because I'm wondering why McDonald's is going down. And that's affected by the dollar. The dollar really isn't doing much here. It's up a bit, but have a list of stocks in each ETF, or did you know, John? It's part of the platform. It's why I use it. TC 2000. I've used it for many, many years, and it's not that the charting is fabulous, meaning how it looks or whatever, but the way it organizes the data for you, just makes so much easier. And its ability to do scans For me, I'm not a programmer. I don't know easy language and, that type of stuff. So, I can figure stuff out that's relatively simple. And on their forum, you can ask questions. It's like, I want to do such and such. Someone will give you the formula, and you put it together on how you want to use it. And it does the scans like in a blink of an eye. So it doesn't bog down the computer. So overall, I mean, obviously I've used it for so many years. I'm happy with it. Just going through these currencies here. Oh, look at this. How low, much lower can it go? But that's a sell setup right there. Is not perfect, but not bad. I didn't realize on the third. This is exactly what I look for on the 5 minute. It's a little sloppy there. With this alignment of these moving averages with the 20 and this and the that's a 50. Was on the daily chart. 50, 60 is close enough, but on the 5 minute, I explained to you why I use the 60. How that changed. I think there's a bug in TC 2000. It likes to change my moving average to a 50 for some reason when I don't have it on there and it's close. DuPont. Yeah. I mean, it rallied up into that resistance there, gap down today. Want to check the weekly? Yeah, I like it. I mean, coming up into minor resistance there. Weekly is broken down. It's where it could roll over for sure. I would wait till a little later today. See if it gets any kind of a retracement here. The market is just grinding lower. just hasn't reached any support point below. And it attempted, the attempt to create the support has failed. Right? So there's that attempt to create the support. And if we go to the hourly here, right? That's why I said there was the unfilled gap down there. And this is where buyers want it, down here. That's where they're going to step up, down there. And so they're waiting. Others decided, hey, I'm going to give it a shot on the retest and on the retest, and now it's failed. So now they're beginning to sell again. I'm just scanning through a few things here. I mean, not on the TC here. I have my other computer pages set up with stocks in daily and 5-minute time frames. Oh man, that stock's starting to break out. The timing is not good. Which, damn. I don't know if you guys use this program, what I'm doing here is just hitting the backspace key, going back to what it was because I don't remember the symbol. There it goes. But does it go forward? Damn, I went past it. There it goes. I can't do that now at this time of day, having trended up. Well, I didn't do it. Did it go lower? So what we want to see with that, David, right? So it did exactly what I would have been concerned about it doing. We just want to see this consolidate into lunch. Now is, or after lunch. It chops around that the 60 comes closer to it. And then we look for it to continue to roll over later on. And we'll come back to it. Let's put it in that list to go back to. SNA. Well, I mean, it's in a downtrend, Florence. So this date might be wrong. It says it's going to report earnings tomorrow, or actually today. I'm sorry. Today is the 19th. So maybe it reported. So just put it on your watch list and see if it can go sideways here for a couple of days. So good volume, cleared some resistance. It hit the 200 and it backed off. And that resistance right there, see what it could do for a few days. Give it a little time. Back in another lifetime, this company, Snap-on Tools, I mean, when I got out, I was going to college for accounting and decided I can't do this. Meaning I couldn't do it. I don't want to do it. I couldn't imagine sitting in a room and looking at numbers all day. And I had this car I used to take down to the quarter-mile racetrack, always working on it. And, so my mom says, go to school and learn how to be a professional at that. And I did. I went out to Colorado, went to school for almost a year, learned how to, tear apart every part of a car, put it back together, and the theory and so on and so forth. And point being, I've spent, I don't know, easily over $100,000 with this company on tools, way more than that probably. And you know what? When I decided to start in the markets full time, I had a gas station repair shop. And I said to the guy that was a good friend of mine, I said, if you want to take this over, I said, run it for a month, see if you can pay me X amount of money a month to buy it. I'll come back in a month, let me know, I'm leaving. And at the end of the month, he said, no problem. He signed the papers. But that was another life. But for tomorrow, possibly, I mean, I don't know where things are, and never look back is right. Some things that for tomorrow that might pop higher that are just hanging out here today. Consolidating at the top of the wide range bar, W day. So nice little consolidation pattern. We can get through this high tomorrow. Let's set an alert up there. And pump. I'm going to set an alert up there. Be a little early. And into it, similar type of pattern. This snap. This thing's holding up here. Look what it's doing today in a weak market day. This just might move later today or tomorrow. Because look at how it's just hanging here under the 200 and the declining 20. It won't drop on a weak day. So let's keep an eye on that. All right, guys, I'm going to take off for a little while. No, I'm still in that. Not happy with it, of course, Vince. You know, oil got itself turned around here, and it's holding up. And this thing just come roaring right back, even though it's extended. The 5 minute was rolled over, and now it's been able to regain that, and just hanging on with a stop up there. My stop is actually 76.85, so not exactly above the high of the day. Gave it a little bit more room because a lot of times they do a peekaboo above that. I didn't move the stop. Even though I share sized it accordingly for that up there, I was clearly hoping that it would never return toward those levels, and then look to add on as a continued week. But it started the way down, and oil just turned around, and they just come right back as when oil popped back up. I'll come back on YouTube later today. I mean, you must have gotten the link for the room. You could come directly into the room, the Zoom room. That looks pretty good, Florence. I mean, I'm not one for holding biotech stocks. That looks good. All right, guys, we're going to sign off for a little while. We'll be back between 2 and 2:30. We'll stay out of trouble. Let's see what sets up for the afternoon.